Hey everyone, it's Paul, and this week I have another incredible, exciting video for you. And the topic of today's video is number one bank run crisis stock. Number one bank run crisis stock. All right. Now I know that some people say that, oh, bank run crisis is over, there's nothing going on. Well, I disagree. And obviously, if you think it's over, then hey, that's fine. I have my view, you have yours. Keep watching anyway. Maybe you might change your mind. But before we go there, disclaimer. What you're watching, not investment advice. Past performance not equal to future results. Errors, mistakes, oversights always possible in these videos. Capital loss is a likely outcome. Whenever you trade, speculate, invest, it's always one of the things to consider. I, the owners, contractors, employees, associates of ATG Digital Media, which is my company, we own, trade, transact in the investments that are mentioned in these videos. All right, now let's get to the heart of the video. So the banking system, despite not having like tremendous headlines recently, is imploding. Yes, imploding. Yeah, I mean, people can agree, disagree, but if you're following the data as closely as I am, yeah, it's imploding. You'll see the headline popping up right now showing you that there is on $1.7 trillion in unrealized losses, just really essentially from all the investments that have gone, I don't want to say bad, but their prices have declined as a result of the Federal Reserve lifting interest rates from 0% to about 4.5%. And that has made the value of even ultra safe in terms of credit quality bonds lose their value. Because when interest rates go up, bond prices go down, banks take your money, and they generally try to get some return for it. And many of them have bought long-term bonds that have lost significant value. And it's estimated, as you can see from that headline that was put up, $1.7 trillion worth of losses. You'll also see from the tweets that I'm putting up that money's exiting the system. Some of it is going. There's like some of it that's going to bigger banks like J.P. Morgan and Citibank and Bank of America and Wells Fargo as people sort of flee to too big to fail banks or systemically important banks as marked by the U.S. government. Other money is going into money market funds. But one way or the other, money is moving out of the banking system and even out of the bigger banks. And when you go and look underneath it all and say, well, hey, in 2008, the government, they essentially came and they bailed out the financial system. They gave all these investment banks, hundreds of billions of dollars. They gave money to everybody to kind of make everybody seem all equal. That way, a bank run crisis would not unfold. But today, we're in a very, very different place. The government, the Federal Reserve, last resort lenders, they're all like in a much tougher place. The government is constrained by the debt ceiling and by the fact that we have been borrowing so much money from foreign investors, from investors in domestic, from United States investors. They're constrained. I mean, it's unlikely that we would be able to do a bank rescue of the kind of nature that was performed in 2008. The Federal Reserve, well, it's constrained in its own way. I mean, inflation is much higher than it was in 2008. And there is so many rumblings going on of Saudi Arabia, China, and other countries wanting to diversify away from the dollar. So if they were to lower interest rates very, very rapidly, they would face the consequence that they would lose confidence of the central banks around the world that have accumulated US dollar assets, which again have gone down in value. Many of those banks have long-term bonds from the US government that have gone down value. So their Federal Reserve is in a tricky position themselves. They can't necessarily just throw money very, very rapidly at the banking system or the financial system. They're going to have to be a little bit more judicious, which means they're going to pick some winners and they're going to pick losers. In other words, there's definitely going to be some losers from the financial system, banking system that unfolds from what is going on. What about last resort lenders? Many people think like, oh, well, Paul, there's the FDIC. Well, the FDIC, for those of you who are unaware, I mean, this is a government-owned insurance company, effectively, that insures deposits of $250,000 or less. Now, the thing is that banks pay into this deposit insurance fund, and that's what is supposed to be there to kind of give you your money back if you have more than if you have $250,000 or less and your bank goes to zero. Well, they'll give you your money back. The thing is that they've got $128 billion approximately in this deposit insurance fund, and the total deposits they're insuring is $10 trillion or over $10 trillion. So, I mean, $128 billion. I mean, if there are another few bank runs, yeah, I mean, this deposit insurance fund is just not going to cover this. And then there's an additional $7 trillion or $17 trillion, I believe, of uninsured funds that are out there. I'm sorry, it's an additional 7 trillion. So there's $7 trillion of uninsured funds, or people have more than $250,000 sitting in their bank accounts that you're just depending on, hey, roll the dice, flip the coin. Will the Biden administration choose to bail you out or not if this deposit insurance fund is consumed? We don't know. It depends on what policy is dictated, what the Fed decides to do. What are they willing to sacrifice here? The reserve status, inflation. In other words, the choices this time around are a little bit more difficult. Then there's this Federal Home Loan Bank, which I talked about in my previous video. So this is the lender of last resort to many regional banks, small and medium-sized banks. And you can see from this the slide that's put up that they've got $55.6 billion worth of capital, yet assets of $947 billion. In other words, they've already lent out, nearly 20 times their capital. So they would need a bailout from the government themselves to be able to bail out the small and medium-sized banks, if that's who is going to come to the rescue as banks need money. Because remember, banks work under fractional banking. When you are giving them your money, you're actually giving them a loan. We call it deposits, but in truth, it's a loan. And they say, essentially, they try to give you your money back, but you're taking your chances. Anything over $250,000 is not insured. And then if they buy into investments that lose value, if they make loans that go bad, say in commercial real estate, and you can read lots of headlines about how, because of work from home, the value of office buildings has gone down, value of malls have gone down. So there is a lot going on that says, hey, you would really need to, think about the financial system as it currently sits is unlikely to be in the condition that it is. I don't know. I would say even in a year, 3 years, certainly in 3 to 5 years, this is going to be a completely different system. So what investments benefit from sort of like the chaos and troubles that are unfolding in the financial system right now? Well, if you watch my videos, I've told you about Bitcoin endlessly. So I've done one video that you can look up, 3 XXX bets on Bitcoin. That's got 54,000 views, so go check that out. There'll be a link up here. I also did last week, Bitcoin $1 million in 90 days. That's based on Balaji Srinivasan, who's gotten a lot of attention for saying that Bitcoin could be at $1 million in 90 days. And his thesis is also based on the implosion of the financial system, that he's laid out. And if you follow him on Twitter, you can follow him, find out about what his thesis is. The second place that I would tell you is going to benefit is fintech stocks. And I haven't done a video about it, but I wrote my Substack, which is being published today. And I really began to think that, like, hey, beyond crypto, fintech stocks, I think, are the new banks. I mean, they are going to be the place that people sort of flee to uh, as this financial system chaos, troubles, implosion, whatever you want to call it, happens. Coinbase is one of them. Many of you might have accounts there and hold crypto there. Many people may even start to begin to choose it as their sort of bank of choice. Prior to sort of crypto going through its crash, people were beginning to start to do that, where they're starting to use Coinbase and some of the other apps as sort of their primary banking app. Robinhood is another one. I mean, where more and more people are beginning to leave money. And then there are the sort of the two big dominant apps that people use for money transfer. One is owned by PayPal, and that's Venmo. PayPal also owns its own, the PayPal app. They also own a number of others as well. But Venmo is like the big one. That's the one that everybody sort of talks about and thinks about and is widely used. And then there is the company that used to be called Square, which is now called Block, and their Cash App. And these companies really, I believe, can benefit from everything that is unfolding in the banking, financial, money system right now. Why? Well, for one, Venmo, Cash App, Coinbase, Robinhood, I mean, you can just go and on those apps and they work 24 hours a day, 7 days a week, 365 days of the year. And that's been true for many, many years now, unlike your bank, where, even though the app works, I mean, they've got all these restrictions, all these things, because underpinning the bank is essentially that old office network. In other words, bankers' hours and all of these things. So convenience, access, ease of use, all of these things, yeah, very much in the favor of these fintech companies. Also, Venmo and Cash App, I mean, very easy to transfer money to each other. If you don't have these apps, you got to go to the bank, get cash out, then go hand the cash to somebody else. They then have to put it back into the bank, or else you have to write a check. It's so much easier just to download one of these apps, and then you can use a QR code. You can find out what their ID is, and you can send money in there. And yes, I am aware that you do give up your privacy, and the government tracks all these. I get all of it, but still, usage says that people are beginning to use this in a big way. And also, while many people may not think about it, there's a lot of people actually just don't have bank accounts. And you don't need necessarily to have a bank account to use these apps. You can receive money from somebody else, even if you don't have a bank account, which from there now you can send it to other people. So they've got massive utility for a lot of people. There's also a big push from these apps to be accepted at businesses. You may have seen, I believe it's Home Depot. You can use Venmo at Home Depot. And I know it's in its early stages, but there is really a very good case to be made, and which I'm going to tell you when I tell you about my number one bank run crisis stock, for rising use of these apps at businesses and how all of this facilitates that. All of these fintech companies and their apps also make it super easy to sort of flip. Like, take your money and buy crypto, take your money and buy stocks, take your money and push it back into cash. Whereas all the banking apps, I mean, you're kind of stuck. I mean, maybe they allow you to, move into money markets, but they have no interest in doing that because, now you're actually making it less profitable for them. The other one is also about sort of the perception, which is that since 2008, the general reputation of the banking system, financial system, is that this is not a reliable party. And the fintech companies are not seen as part of the banking system, and so really not subject to the runs. If anything, people are likely to leave more money at Cash App or Venmo or Coinbase or at Robinhood as a result of what is going on, particularly if you're a bit younger or if you are technologically forward. And potentially they will benefit from inflows as this continues. Now, I told you that the title of this video is my number one bank run crisis stock. So my personal favorite stock here for the bank run crisis is ticker symbol SQ. The company is called Block. It used to be called Square. It's a $70 stock representing a $40 billion market cap. And yes, this is the same company that if you go to a restaurant, many small businesses, they've got a cash register, or there are even people still that, attach that little block to their phone at farmers markets. And when, you go to buy something, you just swipe it. And just remember, prior to Square Block existing, most small and mid-sized businesses were completely locked out of the credit card, debit card system. Square/Block is the company that innovated around cell phones and bringing essentially something very basic to businesses, which is the ability to accept different forms of payment. So, I mean, they've got very, very wide distribution. So in the why as to why Block/Square, ticker symbol SQ, is my number one bank run crisis stock, really, it's all about Cash App. I mean, Cash App is an evolving and rapidly growing ecosystem, and that places it, in my judgment, better than PayPal, better than even Coinbase, and better than even Robinhood in terms of being someplace where people are going to flee to as the old financial legacy world sort of either crumbles, collapses, implodes, whatever happens, slowly or fastly, however it happens. Square/Block is, in my judgment, perfectly situated to benefit from it. And over time, that ecosystem, I believe, is going to replace or supplant the Visa and MasterCard network. So they've got something like 51 million users using Cash App, and they've gotten them for almost nothing. The acquisition cost of getting a user to download Cash App is like $10, which now acquisition cost is kind of like jargony, but remember, customers, they don't come to find you. You have to find them. You got to, put something in front of them, some sort of value proposition in front of them that makes them want to download your app and then use it. And $10 is a very, very, very low rate. I can tell you that in the subscription business or in the newsletter business, people will pay $300 to get one user. So $10 is dirt cheap. In 2022, Cash App generated revenue of $10.6 billion. Cash App by itself producing profits of nearly $3 billion. And you can see here, this ecosystem that Block has built, which is money comes in through various ways, and then they can monetize it in numerous different ways. Everything from buying Bitcoin, transferring instant payments, stock market, and they can add more and more layers to it so that over time, there's just more and more money flowing through, and it generates big returns. You can see that the return on investment from the Cash App ecosystem is just absolutely massive. And what I expect over time is that just like right now, you go everywhere and it says, people accept Visa, and we know like, okay, it accepts Visa. But remember, there was a time when that was not true. And people with a Visa credit card would go and have to choose, oh, does this place accept Visa or not? And if you didn't, then you'd have to have cash. And we are going to come to a point where certainly where all the places that use Block's cash register system, payment systems, they'll also say, hey, we accept Cash App that will allow you to just transact right from the Cash App and pay a vendor, pay a store, pay a business person money straight from your app. And now you've got this network effect that is often the sign of very, very, very big returns in the stock market. If you think about eBay or Amazon, they all have it. In other words, why is everybody, a seller on Amazon or eBay? Well, because that's where the buyers are. Why are the buyers there? Because the sellers are there. So big network effects that really benefit Block and Square. All right. Other reasons why Block/Square is my number one bank run crisis stock. Well, I've told you that I expect Bitcoin to be a big beneficiary of what is unfolding. They've got something like $220 million worth of Bitcoin on their balance sheet. They're one of two or three companies that actually have it. The other two are Tesla, and the third one is MicroStrategy that has made it all in bet on Bitcoin. Now, Square's bet is not quite as big, but remember, they're an operating company, and they also are facilitating Bitcoin payments through something called the Lightning Network, which provides very fast payments, and it's also going to act as a transfer system. In other words, if you don't want to even have to deal with the banking system, and you just want to transfer Bitcoin, you can transfer Bitcoin to each other using the Lightning Network like super fast and all around the world. And this, over time, I believe, is going to facilitate that changeover from MasterCard, Visa, and the credit card companies to Bitcoin and these apps. Also, one of the things that really marks all of the investments that I focus on, and just a quick plug here for ATG Digital Media, which is my company. We've got subscriptions for sort of recommendations, guidance on crypto and growth stocks, OGI, as I like to call it, opportunity, growth, and innovation. There will be a link in the description below. You can also click on the link up there, which will take you to a page. Subscriptions start at $9.99. You can also check out my Substack, where I write about all of these kinds of things for free. You can subscribe over there. But all of the companies that we focus on, crypto, well, they're built on where the world is going, which is all digital virtual platforms. And these platforms are internet-based, crypto-based, and they're global by nature. You don't need to open up a store somewhere else. I mean, you can just get on the internet and you are immediately global. So that's the bottom line for my number one crisis stock. Over time, I totally expect Square to supplant, become really a replacement for something like Visa. So if you go buy into that kind of thinking, SQ, which is the ticker symbol for Block, V is the ticker symbol for Visa, it's going to be equal or more to that. What's the time frame? I'd say 3 to 5 years. So Square right now is a $40 billion company. Visa right now is a $463 billion company. So I would say that 10x return or even more. Why even more? Well, because it's digital, because we also have the emergence of Bitcoin, and we also have the emergence of like an entire digital world that has been created that right now nobody can really think about this, but just remember, nobody could ever imagine that Visa would be accepted around the world and the level of payments that they currently have. So if you think about digital payments being global, all the new digital products that potentially can go through Cash App could be way higher than 463 billion. So that's my video for this week. Number one bank run crisis stock is Block, ticker symbol SQ. Check out subscriptions at ATG Digital Media. Link in the description below. Check out my Substack, or just give us a thumbs up, subscribe to the channel, and come back next week. This is Paul saying bye.